This morning we have Dr. Kenneth Pereira, the Managing Director of IPO-bound Hibiscus Petroleum Bhd. Dr. Kenneth, or Ken as you would like to be known, welcome to BFM. Thank you for joining us. Now, it's been nearly 2 years since the Securities Commission, the SE, introduced the SPAC listing guidelines. Firstly, what is a SPAC, and secondly, what took you so long to join the party?
Okay. Firstly, thank you for having me. But in terms of the fact that the guidelines were issued in August 2009, I think maybe it was a time when we were just, the economy was just coming out of the previous global financial crisis. So I think it was a time when people were just looking at getting back on their feet. So maybe it took a bit of time for people to really understand what the SPAC was about. We actually started our process sometime in July last year to look into the opportunity of raising funds through a SPAC structure. So for us, it's not really taken too long, and it, being the first, as it were, it took a while as well to kind of really understand how it worked and all the ins and outs. From a regulatory standpoint and from an approval standpoint, we actually only put in our submission on the 30th of December last year, and we got SC approval in April this year. So it wasn't so long. Okay, so yeah, we've been quite comfortable. Once we understood what it was about, we were quite comfortable with it.
Okay, so the SPAC is a special purpose acquisition vehicle. You have got the honor, dubious or otherwise, to be the first one to go this direction. Now, the thing is Hibiscus, no profit track record, no assets to speak of, very little or no visibility as to which projects are on the horizon. Now, the thing is, given the weak IPO market, Ken, here as well as overseas, what are you going to do to ensure that Hibiscus Petroleum does not suffer a lackluster debut?
Okay, I think you are speaking about a weak IPO market, but I think we should focus not so much on the SPAC structure, but really the market segment of interest. The oil and gas market, people are claiming that Bursa Malaysia is, many times oversubscribed. So I think when you speak about the right market segment, you can actually garner a lot of interest. So I think if you bring to the market something which strikes their fancy in terms of industry segment, I think that is already a good start. The financial structure of a SPAC provides quite a lot of safeguards for the investors, and I would say the challenge we have had is making sure they understand those. I think being the first, people don't really understand it. That's been the feedback we have received. Okay, so we've taken a lot of time to kind of go on the road, meet remisers, talk to them, so that they can advise their clients properly when this thing goes to market. So one more thing I must say is when we went on the placement round and we tried to see what interest would be from placees, we very quickly got up to we exceeded actually the minimum level required for listing from just the placement round. So that encourages a great deal.
Okay, before we get into the places or the downside protection measures, you raised Bursa Malaysia, of course, as you say, 25 times oversubscribed on the institutional portion, which is not to be laughed at or with that. Thing is, they list on 22nd of July, you list on the 25th of July, just 3 days later. Are they going to pose, are they going to steal some of the thunder, as it were, from the Hibiscus listing?
I don't think so. We take a lot of time to tell our investors that this is a mid to long-term play as far as the mother share is concerned, the Hibiscus mother share. So we tell them, please do not expect a booming start. So we're not really worried about stealing the thunder from somebody else. We've been telling our investors, look at the whole package. The shares come with a warrant. Maybe if you're a short-term player, you may have to focus on the warrants earlier on. And the mother share is something you need to see really finally what targets we bring to the table as a management team. Then we really need to talk about the share performing. At this point, we also share with them that the empirical experience overseas where SPACs have been actually IPO'd, you generally don't see much performance in the share early on. It's only in the warrants. And but once the acquisition targets are announced, then people decide whether it's interesting, and then the share starts moving.
Okay, so under the exercise, you've got just 10 million shares for retailers. That's rather small. But the bulk of the offering, up to 390 million shares, up to be offered to selected placees and investors. You've raised about half of that already, 150 million. So that's okay. Who are the other half, and what kind of What kind of response has there been? What's their profile typically?
Okay, so firstly, we've raised more than the half, okay, from the placement round. But I also want to kind of, there's a little bit of a misunderstanding on the small retail portion. We wanted to make sure that investors who came into this were properly briefed. Okay, so we felt that it would not be fair to put out a huge retail portion, and sometimes people may not fully understand the entire package. Okay, so we kept the retail portion small. Placement portions require us talking to maybe a slightly higher level of sophistication in the form of investors, so it gave us, so we tried to put that protection mechanism in, and in case the retail portion is oversubscribed and the placement portion is undersubscribed, we have provided a spillover provision. In other words, the retail portion can spill over into the placement portion if there is capacity in the placement portion. So we have tried to kind of balance things out a little bit.
Okay. Also under the terms of the exercise, the founders, such as yourself and the senior management team, your cost of entry is 1 cent per share. The shares are being sold into the market at this point in time at 75 cents a share.
Mm-hmm.
The first round investors, placee investors, have been bought at 45, get their entry price at 45 cents a share. Under the terms of this, where the timetable is right now, the placee investor will be buying at 75 cents?
That's correct.
Okay. What's the response been? What are the profiles typically? What kind of concerns have they been raising?
Okay, so firstly, let's talk about the profiles of the investors. The first round investors were basically the management team and our non-independent directors. Okay, so we came in at 1 cent because when we started the company, it was a $2 shell, and the par value we set it at 1 cent, and we came in at 1 cent, and we started developing our project. In order to test the market, whether we could actually pull this through, we went to see whether we could raise 10 million ringgit from some initial investors. At that point in time, we have to understand we had not even put together our full package, our submission to the SC. So it was prior to December 30th last year. And we asked several investors, some of whom we knew and some whom we didn't know, whether they would back such a proposal. We were pleasantly surprised that we were able to raise 10 million ringgit, and we offered it at 45 cents. It comes, it comes with it certain conditions. For example, the shares are under moratorium. The people who come in at 45 cents cannot sell their shares until after the qualifying acquisition. The people who come in at 45 cents have got they do not get that 90% refund flexibility. They have no opportunity of that. And the third, I would say, it's not really a safeguard, but it was placed upon the initial investors. We said, well, you're coming in at this point in time. We are unsure whether we are going to get all these warrants together. We are unsure whether we're going to get discounts on the warrant exercise price. That was all not sure at the time. So they don't have all of that, and they also don't have anything in case of the company is liquidated in 3 years. No refund for them. So we gave it to them at 45 cents. We got 10 million ringgit in, and that 10 million ringgit actually allowed us to get going with all our advisors, our legal advisors, our
Okay, so some of those early stage investors included Bursa Petroleum's Nagendra Nadaraja, yeah?
At
45
cents.
Bursa Petroleum. And sorry, formerly of. The thing is now, that class of investors don't get the warrant protection, is that right?
No, they don't get the refund protection.
They don't get a refund, but they
get the warrants.
They get the warrant. So just to clarify, you buy 1 share of the Hibiscus,
yes.
You are moratorium against selling that, but you can trade the warrants, and the warrants are attached one for one, yeah?
That is correct.
Okay, so in your opinion, what is the possibility of some of these investors, or rather a large majority of these investors, trading out their warrants on debut day?
This is the initial investors or the whole group of investors?
Generally.
Generally, yeah. I mean, it is possible. That is going to be a market thing. If people want to do that, they're welcome to do that, and they're free to do that. We will not be trying to manage any of that.
The thing is, it doesn't affect the share price.
It doesn't affect the share price. It doesn't affect anything to do with the safeguards in place. And if you hold your share, the safeguards, you are still entitled to the safeguards, the refund flexibility, and all that kind of stuff.
Okay, so that's a bit of a sweetener because then at least it incentivizes you to buy Hibiscus. The thing is, typically the stock exchange gives you the benchmark is two shares for every, or one warrant for every 2 shares. In this case, Hibiscus got 1 warrant for 1 share. Why?
Okay. Typically on IPO, if a warrant is approved for issue, it would be on a formula of 2 shares per warrant. Okay, but in our case, we made a case that we needed to provide some downside protection for the investors who came in, because there is a possibility, and empirical evidence from overseas shows that you could have the share price dropping a little bit. Okay. It is supported by the 90% refund flexibility, but it can drop a little bit. So we felt that there would be this, there could be this phenomena. So we asked for the warrant, the 1-for-1, and we also asked for a discount on the exercise price of the warrant to the mother share. So that is given, and that was given to us at a 33% discount. So in fact, you get your warrant, and that's also another waiver. That is normally, the Bursa and SE do not allow warrants to be issued lower than the to be exercised.
So they're instantly in the money. They're striked at 55, whereas the shares
at 50.
At 50,
yes.
And the mother's
the mother's at 75. Yeah.
Okay. We are talking to Dr. Kenneth Pereira, the Managing Director of IPO Bound Hibiscus Petroleum Bhd. In just a couple of minutes, we'll get more of your views on the downside protections.
Sure.
Today we're talking to Dr. Kenneth Pereira, the Managing Director of IPO Bound Hibiscus Petroleum Bhd. If you have any questions for him, please do call 7710-9000, that's 7710-9000, to get a direct line to Ken, or text your messages through to 016-201-9000. Now, Ken, on to the prospects. Now, after identifying a qualifying acquisition, or QA as you say, you've got 3 years to complete the transaction. First of all, this seems a little long given the fact that you've spoken of these targets as being cash hungry and explorers only in need of a little bit of money. How long will investors need to wait before getting some bang for their buck, Ken?
Obviously, for everyone, for investors, for management, for the initial investors, it would be better, the sooner it is done. However, we also have to be careful that we select the right opportunity, and in this respect, we have a set of investment criteria that will allow us to rank opportunities. And I'm sure when we finally do present the opportunity that we have selected, we would have to also present a case why we selected it and how it compared with other opportunities we looked at. So, whilst there is 3 years, those are what the guidelines give you. We think we will do it as quickly as we can, but at the same time, not I would say, neglecting our duty to do it carefully.
Okay. Now, you've been quoted in the Business Times. You've been asked about this IPO. You talk about how the risks are capped. In fact, low to moderate risk was your quote in the newspapers. Now, can investors expect the Hibiscus, maybe in competition with other cashed-up firms, whether it's VCs, venture capitalists, or private equity firms? And is there a risk of overpaying if you enter a bidding war for a particularly prized asset, as it were?
Okay. You have when you are going to bid for a project, you would have your own financial models, and you would have your own, you would have a mandate from our board. We have a strong board, a technically strong board, and we would have a mandate. We'd have to present to our board what we think are going to be the returns, and we would have a band to work with. Okay, and I think the important thing is never to be emotional about these things. We come from the strong position of having, or we will be coming from a strong position of having the funds with us. So if we don't get the right opportunity, we don't see the right returns, then we can't really, take it up. We really can't, because we must always bear in mind that the management has come in at a discount. We have some initial investors who have come in at a discount, and the IPO investors who are coming in now would expect a certain return that basically compensates them for the carry they are giving the management and the initial investors. So we have to give them that type of return. Otherwise, they're not going to be happy. You end up spending $1 for something worth less than $1.
Absolutely. You've talked about how the target fields are in South Asia, the Middle East, East Asia, and Oceania. That could include oil-producing countries like India or the Middle East or Australia or even New Zealand. Now the thing is, to what extent do you rate country sovereign risk? And here I'd like to cite the ENRC issue where the miners in Kazakhstan had, shall we say, corporate governance issues with Kazakhstan entrepreneurs who didn't like the governance requirements placed on them.
Yeah, there are two things again here. One is every country there is a political risk factor, and we weight it accordingly. Okay, we have our own relative weightings for each of these countries. So we would look at that and we would look at the long term, how other parties how other parties view it. If you see if you see large internationals going into a country, that is also an endorsement that it is something that they're comfortable with. So we are not going to be trailblazing in that respect. Okay, we're not going to go flying into something where no one else has gone. We'll be cautious. We understand that we are the first SPAC. We understand also that we would be the first, I would say, listed, focused E&P company in the country. So we understand that carries with it certain responsibilities. So we will be cautious about how we do this.
We have with us today Dr. Kenneth Pereira, the Managing Director, as well as being one of the founders of IPO-bound Hibiscus Petroleum Bhd. Call Ken and ask him a question directly by dialing 77109000 or by texting 016-201-9000. Now, Ken, analysis paralysis notwithstanding, you've got a lot to prove, of course, being a trailblazer. What's the risk of Hibiscus rushing to a deal just to prove the naysayers wrong?
Again, I say, at the end of the day, you are right. There is analysis paralysis, and there's a lot of choice in this business. So I think you need to just be disciplined about your investment criteria. You've got to understand timelines. I think we have to understand that we're a public company, so people expect to see some kind of visibility on when things are going to happen. So I think that we have to balance it. It is not going to be, in our case, we also think we have a team of people who are not afraid of making a decision. So that's very important. Okay.
Oh, okay. So you list on the 25th of July.
That's correct.
When can we expect, some kind of qualifying acquisition to be proffered to the board?
I would say as soon as we think in our judgment that we have something that would make the cut. Okay, I would have to say that.
Is there any kind of visibility as to a timetable?
No, but we understand that we will be a public company, and we don't want to keep shareholders waiting very long.
Okay, and what happens if the non-management team voting majority, I think as high as 75% of the shareholding role, they vote against an acquisition? Now, does the whole process start from scratch again?
That is correct. In fact, you have actually three ways things could go. You could bring a deal to the table at an EGM and ask for the vote. And you could have the majority voting in favor and some dissenting. And then the dissenting shareholders would then would elect to exit the company and would get their refund, and they would have hopefully made some money on the warrants. And hopefully that ends there. There's also the possibility that the majority are not in favor, in which case all the funds remain with the company, and we go back in a loop and start looking for another opportunity. We hopefully learn from the experience, and then we keep doing this until we get something through. So that's how things could go. And we look for, amongst the placee investors, we have some people who have some experience in this industry. So we hope that they would give it its support, actually.
Okay, let's take a call now, Ken, from Subang, actually. Listener named Stephen. Please ask your question.
Yeah, Stephen, both the warrants and the share are tradable from day one. So yes, you can sell both on the same day, no problem. The warrant exercise price into the share is 50 cents, but I must tell you that you cannot exercise the warrant until a qualifying acquisition is done, until we actually spend the first round of money raised from the IPO. You can't really exercise the warrant. It is just trading as a warrant.
Okay, let's move on. Thank you, Stephen. Let's move on to a situation where what if investors get tired of waiting? If circumstances change to such an extent that they choose to recall the capital or redeem the capital, whether a downturn or oil prices head south, then what does Hibiscus do in that circumstance?
We have elected to go with a public structure because actually shareholders can exit a public structure at any time. I mean, you can sell your shares in the market. It is a choice you take at that point in time. If you see something more interesting, you have a public vehicle and you can dispose of your shares in the market. So if you get tired of waiting, then that is one election you can make. Otherwise, you wait until there's an EGM, and you can then choose not to approve an acquisition, and then you would, if the majority approve it and you don't approve it, you would then have an opportunity to get your money back as well.
Okay. Now, Ken, oil and gas does seem all the rage right now, as exemplified, of course, by Bumi Armada's subscription rate. Now, the thing is, what happens if, how would you allay concerns, in other words, that, the Hibiscus seems to be a bull market play, rather than one which is opposed to, when the thing is because risk appetites are slowly turning, in fact, rapidly turning conservative. If economies turn south, whether in the Eurozone or the US recovery is longer than expected, demand for oil would recede and oil prices would head in the wrong direction.
Yes, I mean, it is a cyclical thing, but the long-term projections for oil, and this is a long-term project. E&P companies, they are long-term plays, but we feel that in the long term, because of what the demand projections are, most likely oil prices might fluctuate up and down now and then, but the general trend is oil prices are going up. It's a finite resource finally, and demand is always in the increase, so we have a lot of emerging economies around the area where we are going to be working. So we think it is, in the long term, as far as our time horizon as a company is, we think it's a very robust industry.
Well, the thing is, you're on the clock. You've got 3 years to show something or not. The thing is, you have to be long oil, otherwise you wouldn't be in this game. Now, what if the unthinkable happens and oil goes short? Down, in other words.
That would be something extremely radical. I mean, there would have to be a huge, I would say the entire global economy would be kind of affected. Energy is one of the main drivers of GDP growth. So if you, from an economic standpoint, in fact, there is a factor called the energy dependency factor. Your GDP depends on the amount of energy you have access to. So I think that oil is one of those key components of the energy mix. Most countries have a huge dependency on oil. So we think it's not something that's going to disappear in the short term.
In the middle of the financial crisis, about 3 odd years ago, Ken, oil prices were at about 55 bucks a barrel, 45 bucks a barrel. Could we ever see those levels again, at least in the immediate term?
I've seen oil at $12.
Okay.
And the
in which case, then your proposition becomes negligible.
But the industry has still survived.
Okay.
So the industry still survived.
Which then begs the question of your break-even cost. At what point you stop making money?
It depends really on the particular project. If it's onshore, if it's offshore. But different places, taxation systems come into play. And but if you select your projects properly, you develop it optimally, and you take a long enough term view on oil, then I think mostly you should be okay. It is a long-term industry. Okay,
and so on to the biggest asset of all within Hibiscus, which is yourselves. We're almost running out of time, so just a quick rundown of the strengths of the management team.
Yeah, okay. I think we've got we've put together a very strong initial management team. We've got a board comprising of many years industry experience. We've got Encik Zainul Rahim, who's our chairman, and Dr. Ravi Bastia, who comes from Reliance Industries. Dr. Ravi is, I would say, one of, anyone Googling his name would see his achievements, but he comes with 2 doctorates, a number of degrees after that. He's one of the foremost geologists in India, and he's been attributed with many discoveries. He was one of the founders of Reliance Industries, which is now the largest independent oil company in India. I think it has a market capitalization or a valuation now about $30 billion achieved in about 12-13 years. So we're very happy to have him on board as a board member. We have Dr. Pascal Hose, who left Shell in January to join us. He's a reservoir engineer with special skills in secondary recovery techniques. Secondary recovery techniques are techniques you use to squeeze the last bit of oil from the ground. So he helps you make your projects more viable. So we think we have a very strong technical team. Ewan Jeffrey is also another gentleman we have on the team, a master's degree holder from Imperial College. He has a thesis that's been written all about small field development. So we worked with a company called Schlumberger. He's a petroleum engineer. Very, very strong team. More than 150 years experience combined, all of us.
Okay. With the way the world is going, and under your mandate, with a SPAC mandate, does it give you the right to perhaps explore for other hydrocarbons other than oil and gas, for other minerals, in fact, whether it's rare earths or whatever?
No. We are going to stick to what we know. And we've got 150 years experience, or more than 150 years
exactly in oil and gas.
All of it earned in the oil and gas industry. So we are very, very focused, and that's what we've been selling to people, the industry, and the people who are going to exploit that particular segment. So no, we will not move from that.
So now that we've dealt with all the downsides and all the black swan events, what's the upside here, Kenneth?
I think there are two upsides. Okay, first, when we started this project, first there's an opportunity to create in Malaysia an independent oil company. Okay, so that is an upside to this whole project. Actually, there are a group of us who take this opportunity to put together our experience and our expertise, and we're trying to create some, and we're using a set of rules which are very transparent, and we're trying to provide in the market a play that actually tracks oil price. We actually don't have a counter on the Malaysian Stock Exchange that really tracks oil price. Okay,
this would be it.
This would be one. I mean, Petronas Dagangan is a surrogate for that, but mostly you don't have an upstream player that tracks oil price. So that would be one. The second thing we're trying to achieve from doing this is to actually demonstrate. We think there are lots of entrepreneurs out there with lots of good ideas, and if we can just demonstrate to them that there's actually a way to secure capital, if you put together a package, there is actually a regulatory framework that acts as a good platform. And if we can get this done right, and we think a lot of other entrepreneurs are going to come out and try and do things like that, and I think for the whole economy is something very good, actually.
Well, the SPAC structure can be used for anything, whether it's rubber gloves or
exactly.
tin mining or whatever. Last questions, on your advisors. Now, Hong Leong Investment Bank in the press recently, they got regional plans, but they're new to the IB game, the investment banking game. What did they bring to the table, and are you concerned that perhaps they might not be as experienced as other, more established IBs?
No, at the end of the day, when we started this project, we actually didn't have much money with us. Okay, we're a group of people who kind of had an idea to do something, but we did not have much money behind us. And Hong Leong were a bank that actually supported us initially, without knowing whether this was going to take off. It could have done them damage as well from a reputational standpoint. So they backed us. We appreciate that. We were not able to sign their mandate letter till very late in the day, because until we got the initial investors in and we had 10 million ringgit in the bank account, no one was ever sure of getting any fees. So we are grateful for the support they gave us, and we've had a very good working relationship with them. And the team that we've been working with, we really appreciate the hard work they put in, because a lot of stuff that we did, people have not really done before.
Okay, well, 25th July is the day to watch out for, yeah, Gong Day. We do wish you the best of luck, and all the best with the future endeavors in terms of finding some nice and snazzy oil and gas plays. Kenneth, thank you for your time.
And thank you for giving me this opportunity.
That was Dr. Kenneth Pereira, the Managing Director and founder, or one of the founders of Hibiscus Petroleum Bhd, IPO bound. I'm Kusu Chong, BFM 89.9.